Income in retirement looks very different than income during your working years. Hi, I'm Michelle Smollenberger, a fee-only financial advisor here at Financial Design Studio. And if you enjoy watching videos on financial topics, please be sure to subscribe to our channel. Now today we're talking about retirement income and cash flow, and there's a few specific things we're going to talk through. Those things are the different types of income during retirement that are common, how do inherited funds affect retirement income, also how to manage your cash flow, so all this income coming in for the expenses that you need to cover, and then finally, how does this all fit into your overall financial plan? What I want to be sure and mention is I'm going to talk about a lot of different specific things today, and we have videos on all of these topics, so be sure to check the notes below to watch those videos too. Now first, let's touch on the different types of income that you'll have in retirement. And the most common that we think of first is Social Security. Now this is kind of most people's primary income in retirement. And this is just because typically when you stop working, you start receiving Social Security. And depending on the age you choose to start, you'll get certain amounts. So this is kind of the first or most common that people think of. Then from there, you might have also a pension. And this is an employer benefit that you've been given, and depending on the number of years you've worked at your company or your earnings right before you retired, your pension benefit is going to be also another piece of income that you're earning. Now, not everyone has pensions. These are still a really nice benefit that we see pretty often, but not everybody has this. The next item are these retirement accounts. So these savings that you have been setting aside year after year, and now in retirement, it's time to switch to actually spending this money down. So retirement savings accounts can be a lot of things. It could even include something like an annuity or your 401k. And so it's all of this money you've saved for the purpose of retirement. Now finally, one that we're seeing more commonly, and some people don't necessarily think of this as part of your overall retirement income or even your financial plan at all, because we never want to plan on receiving these things until it actually happens, and then we can put it into your plan to see the difference it makes. And what I'm talking about are inherited assets. So with inherited accounts that you receive, these are funds that someone has given you or someone has passed away and they want you to have. Now, something that we hear commonly from people is with inherited assets, they will ask, how should I invest these funds? And a lot of times you kind of get stuck on how should I use this money in my plan? And the reason for that is because we think of the person who gave you this money and where it came from. And so the thought is, should I invest it how they did, or should I do with it what they would want me to do? But I really want to challenge you to think about this differently. And that is that when someone gives you money, you've inherited money from them, they have now accomplished one of the goals that they had, and that was to pass on money to you and other people possibly. And now, as part of their plan, it's coming to you, and that's what they wanted. That was their desire or their goal even. And so now you need to decide, what do I do with this as part of my plan? Not as part of theirs. They've accomplished what they wanted to. Now it's saying, how does this fit into my plan? Now the reason that I mention this as in income in retirement is because these inherited accounts could literally be giving you income. If that's dividends or interest, these could be large stock positions that someone held and now they're passing this on to you, which is literally giving you income from this, and maybe at the exact wrong time that you need it. But it could also be at the right time that you need it. The other way is that these could literally just be assets or holdings like investments that now you just have to choose when to sell so you can use these funds. So you can get inherited accounts or money in a couple of different ways. This is why it's really important to think through how you use your retirement assets and your income now to make this part of your cash flow. So now that we know most of the common types of income that we have, let's look at kind of what this looks like when we actually put this into practice. So if you think of cash flow for retirement, let's just think of this as kind of a bucket. We need one big bucket that we're going to take money from so that we have the money that we need to spend. So we're going to assume that you need $100,000 of expenses, of money, to spend for your expenses in each year. And initially, the first step, what you want to do is look at the income you know you're going to get. So if we just simply start at the top here of the list that I've put together, let's just start with Social Security. And we could assume that we're going to receive $30,000 in this form of income, and we know when it's going to come regularly. So then let's assume on top of that you've decided to take your pension and you're going to take that in a regular monthly amount for the rest of your life. And let's also assume that we're going to get $20,000 a year from that. Well, now this amount in here is really what we have to consider how we're going to make up the difference. So we know that we need $50,000 more from the savings that we've set aside for retirement into these various accounts, or possibly if you've inherited assets, now they may need to come from there too. This is why it's important to start with the pieces that you know are going to come in regularly, and then we make up the difference from where it should. Because what's really interesting in these types of accounts, you may have a 401k, which is like a tax deferred account. You may have a Roth IRA, which is tax free when you take money out, or you may have just a regular joint account that you can take money out and you only pay taxes when there's a gain. So I want to point you to one video that we've done, and that talks about asset location. And that really talks about investing your money specifically in different types of accounts for different reasons. This will also help to explain to you why money could come out from these different accounts, because they're all taxed differently. One of the biggest pieces when you're looking at this retirement income that you have to connect between these two are the tax implications that you're going to have depending on where you take money from. This is why it's so critical when we ask, how does this fit into our financial plan? Because the tax implications, or how much tax you're going to pay, depending on where you take or where you get this money from, will factor into how much money is left for how long in your plan. We want to minimize the taxes as much as possible. I hope this video has been helpful to explain to you how to think about your retirement income and cash flow. It isn't a scary topic. Maybe your paycheck's going away. However, we're going to just create a new paycheck from different sources. Another thing you might enjoy checking out if you'd like to get to know us a little bit more is our podcast. It's titled Behind the Designs, and you can find it wherever you listen to your favorite podcast. Thanks for checking this video out today, and we'll see you next time.